Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second indecisive pattern on Friday, this time an indecisive spinning top, with shorter legs than the previous indecisive doji cross. And despite the range, the close was perfectly captured between the overhead 50% Fibonacci line of the January 2021 to September 22 move at 109.44, reinforced by the significant bright red, slowly declining head and shoulders neckline extension of the July 2017 to November 2018 move, currently at 109.81, and below by the flatlining mauve medium moving average, currently 109.35. This exhibition of indecision is still continuing as 4 of the previous 5 days had indecisive patterns despite the lower overall market. I previously stated I regard the bright red neckline as a proxy for the neckline for the mid-August today action being an even eve double top pattern. Thus, I'd previously laid out a primary target X down in the 108.88 zone with a secondary harder to reach target X1 down in the 107.91 zone. Below, we next have the combination of the flatlining gold long moving average, currently 108.72, and a 50% Fibonacci line of the whole of the 23 move at 108.64. So far today, seemingly capped by the mauve medium moving average, but not aggressively attempting to move lower either. Cable, aka sterling against the US dollar. A second indecisive pattern on Friday, which is a second consecutive indecisive spinning top, with shorter legs than the previous one. However, prices this time closed significantly well below the somewhat surprisingly extended support of the rising green short medium moving average, currently at 130.82. Overhead we have the July 2023 high at 131.44 and the December 2020 low at 131.33. Meanwhile, below we have the September low at 129.99 and then the mauve rising medium moving average, currently 129.47. Now, so far today, a slightly lower open, but not much of a move lower. Prices seem to favor staying around and just around the green short medium moving average at the moment. Euro sterling. An indecisive spinning top on Friday, but one that could also be seen as a bearish harami after the previous session's bullish thrusting pattern. The top side was capped by the combination of the July 2024 low at 83.81 and further congestion at 83.86. That actually caused a low in July in the first place. And yet again, still somewhat surprisingly, the move down was halted by the short moving average of all things. It's not the first time it's done that in recent days, and that's currently 83.58. Looking below, well, there's not much until the August 2022 low at 83.38. So far today, further pressure lower, moving prices down to already test the short moving average, but no more than that this time. US dollar against the Japanese yen. A counter to the counter bullish piercing line pattern on Friday after the previous session's immediate countering bearish harami. Prices once again closed well into the prior cap of the combination of the lesser Fibonacci line at 148.68, which was breached, and the 50% Fibonacci line, the July 23 to July 2024 move at 149.61, which was not breached. The market continues its move up and away from the dark blue neckline, currently at 146.08, of the lopsided mid-August to early October reverse head and shoulders bottom that was originally masking as a possible bearish halfway hesitation. This pattern has a primary target X in the 151.48 area and a secondary hardest reach target X1 up in the 153.60 area. the market will have to overcome some considerable resistances topside, apart from the ones already mentioned. Notably, the flatlining gold long moving average, currently at 151.27, the declining mauve medium moving average, currently 151.06, and the bright red shallow middle time, currently 152.32 of the late December 2023 to early August 2024 bullish shift pitch walk. The only other thing to bear in mind is the weekly key reversal up the market made 2 weeks ago. Now, so far today, a small, very small attempt higher towards the 50% Fibonacci line at 149.61, but no more than that, just an attempt. US dollar against the CNH, the offshore Chinese yuan. Bearish closing black Mariposa on Friday after the previous session's bearish dark cloud cover pattern. Prices tested down to the first support below, which is the June 2023 low at 706.57, but failed to break below it. Overhead, we have the relatively new dark blue upper time, currently at 709.19 of this mid-September to early October based bearish shift pitch hook, and above that, the lesser recent Fibonacci line at 709.99. This dark blue bearish pitch hook had been a bit of a presumptive move on my part, but it is starting to show an idea of the bearish angle of attack of this market, if the market chooses to go that way. So far today, a higher open and a move up from the open, but it has been limited, capped by the dark blue upper time. US dollar against the Mexican peso. A bearish closing black Mariposa on Friday and second bearish black crow. Most importantly, the market made a clear break and closed below the overhead combination of the green rising short medium moving average, currently 1936.09, the combination of the dark blue lower time, currently at 1942.62 of the recent mid-August and mid-September bullish shift pitch fork, which ties in with the purple neckline at the same level of the late July to late September lopsided head and shoulders pattern, plus the bright red lower time, currently at 1945.99 of the very important big picture April to July bullish shift pitch hook. So altogether, quite an interesting development below this very, very narrow congestion range. The decline did not manage to reach the next supports below the 50% Fibonacci line of the November 20 to April 2024 move at 1920.38 and the March 2020 low at 1915.03. All this is in the shadow of the weekly key reversal down made 2 weeks ago. Now, I had earlier placed just in case some potential targets below for a breakdown through the purple neckline, with a primary target X down in the 1865.15 zone and a secondary harder to reach target X1 down in the 1802.10 zone. I was not sure about these, and I even last week had then the opportunity of retirement here, the threat of retirement. However, it looks like the opportunity on the downside has revived, and I'll leave them on my daily chart, those points, just for now. Now, so far today, a small move lower and higher, but not as yet testing the overhead green short medium moving average overhead, nor as we've moved back down again, testing the 50% Fibonacci line that's below.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.